Okay, everyone. Well, what I'm going to do today is just kind of briefly walk you through essentially the format for the final exam. Now, you can do your spreadsheets however you need to do them, or your spreadsheet in this instance, however you need to do it, as long as you get me the right answer, right? But what I wanted to do is just simply go over just a few things in the final exam that may be helpful for you as you kind of go through the analysis of Citrus Plaza. Now, what I'm going to do is I'm going to show you um, a, a modified Citrus Plaza spreadsheet. So I'm going to show you some setup here in my spreadsheet for Citrus Plaza, but just be warned, the numbers in this spreadsheet that you're going to see have been changed to protect the innocent, okay? So do not use these numbers as facts in your case study, at least on this presentation of this spreadsheet. Use the numbers in the fact pattern and in the case narrative. What you're going to see are just simply placeholders, but I'm showing you the format that I used, which may help you set up your spreadsheet as you go through the case. All right, so let's take a look. All right, now what I've done here is I've said, okay, this is Bruin Bear Properties, all righty? Now, these are not the actual numbers from the case, right? You can see here, I have thrown in here a $15 million purchase price, okay? I've changed some of the deal structure here. I've changed this to an 80-20. I changed reversion to a 65-35. I've done some things here to throw you off, so don't use these numbers in your case. But I'm hopeful that this short video is going to help you kind of format your spreadsheet or set it up so that you're not spending too much time on just creating the spreadsheet and not actually doing the case, all right? So these are just some return numbers. We did say that the gross potential rent is going to escalate by some percent every year. We said that the operating expenses were also going to increase at a rate of 1.5% per year. We're going to hold the property for 60 months. Nothing's really changed there. We do have an entry and an exit cap rate. The entry is basically given, although you can calculate it as you reconstruct your operating statement, and the terminal cap rate was given, okay? Vacancy rate, we're going to throw in a 5%. That's part of the fact pattern. These are just simply your first year ratios. I want you to complete the case study according to the questions in the case, but here are just some typical static metrics, no big deal. We calculated in this case an investor's IRR of 6.8%. That is not correct, right? None of these numbers are correct, but I'm just showing you kind of how I at least formatted the answer key here, at least for the case. The debt coverage ratios, you're going to need to calculate those. Present value of cash flows, this is simply the investor and syndicator partitioning. Okay, again, these numbers are not correct. The deal structure, I'm throwing in here an 80-20 at the front end, a 4% cumulative preferred, a non-cumulative rather, preferred return, an investor reversion and syndicator reversion of a 65-35. Again, not the actual numbers in the case. So what you're going to do, of course, you're given a couple of different loan scenarios. So as you've already done in the past, just go ahead and underwrite both loan scenarios and then select the loan program that offers the lowest effective cost of debt. You'll have to choose between these particular loan programs, all right? Then, what I did say in the fact pattern in the case narrative, that your gross potential rent should be some particular number per month to begin the hold period, right? So again, reconstruct the operating statement based on the numbers that you have in the case. But then, of course, as you know, I did throw you a little bit of a curve here on the last day of class by introducing a retail case to you. Now, the only real difference between your multifamily cases that we've done so far and this retail property is that we have to deal with CAM, common area maintenance. And we said in the fact pattern that our first year CAM is $217,000 and change. So what we're going to do is we have to apply those expenses to your reconstruction of your operating statement. So make sure that you do that. But what we're also going to do is we have to treat for the recapture of those CAM charges. And typically what we do is we can do it in a variety of different ways, but sometimes we add it back up here above the EGI line. So every single year, right, 227 recaptured here, we are paying 227 out for our CAM charges for the year, and then the tenants are going to reimburse us for those CAM charges. So this is a triple net, all triple net leases. All of the property taxes, insurance, and the maintenance on the property are going to be passed through to the tenants based on their pro rata square footage of occupancy. Okay, so if we have a 10,000 square foot building and we have, I don't know, we'll say for the sake of argument, 4 tenants that occupy 2,500 square feet, then each tenant is obviously going to pay 25% of the CAM charges, right? 2,500 square feet divided by 10,000 square feet pro rata is 25%, right? So whatever you do here for the CAM charge, you just recapture it above the EGI line, right? And then just do your basic calculations. This is nothing out of the ordinary but for the CAM charge, and I just told you. And of course, we went over it last Thursday. Just add it back and recapture it, whatever the number is. All right, then we've got some debt service here. This number may or may not be accurate according to the case, but we do have then, of course, our before tax cash flow. Then from the before tax cash flow, remember, we're going to deduct any preferred return that is due and payable to the investor. Now, in this instance, we don't have enough cash in our first few years to cover it because I've Mickey Moused with the numbers. I've played around with them, not to give you kind of an inside scoop on the deal, right? But I'm giving you an inside scoop on how you may wish to consider formatting your spreadsheet in order to analyze and complete the case. Okay, so this is the disposition value. We're going to split that off based on our percentages for investor and syndicator. And then here's the purchase, the qualified loan amount, any origination fees, any additional closing costs, etc. And then here I just changed it to an 80-20 on the front end. So therefore, we then have the equity investor. Don't worry about this thing called the stage 5. This is just, when I was in the MRED program at USC, we learned a variety of different spreadsheets. We call them stage 1 to stage 5. Stage 1 is basically our first year metrics. Stage 2 is if we were purchasing an investment already constructed. Stage 3 is monthly cash flows during the construction process. I think stage 4 is quarterly cash flows during construction and lease up. And then finally, stage 5 here is just simply parsing out the equity between the investor and the syndicator. So you've seen this before. This is our equity investor syndication. They're only coming up with a 6.8% IRR. We know that's not going to be the fact in the case. And then, of course, because our IRR is less than our NPV discount rate, our NPV, of course, will be negative. The syndicator here is going to get a 17% IRR. And because the discount rate for the NPV is lower than the IRR, or in other words, rather, the IRR is higher than our NPV discount rate, then our NPV dollar amount will be positive. So just an idea to kind of think about how you're going to format your spreadsheet, analyzing multiple scenarios simultaneously, which is kind of this is a pretty hefty case, hefty spreadsheet, and I know each of you is capable of doing this. All right, so that in a nutshell is essentially kind of how to build out your spreadsheet for Citrus Plaza, your final exam. So I'm hopeful that you're all enjoying the case. I've only received a couple of text messages so far, so my assumption is that you're all doing swimmingly well, or in the alternative, maybe you haven't started the case yet, but don't hesitate to reach out if you have any questions, all right? I'm hopeful as well that you're all enjoying the case. Good luck.